How's it going, everyone, and welcome back to another video. We are going to be talking about the 4-hour power of 3, or how to trade the open high-low close of a 4-hour candle. Now, if you haven't already seen my candle 2 and candle 3 video, be sure to check those out first, as if you do not understand those, this video will not make sense. So the first thing we're going to talk about is what is a power of 3, or what is AMD. Well, if you've seen my AMD video, we have accumulation, manipulation, and distribution. We have a consolidation range, which then has an opposing run, and then we are looking to trade this distribution or the real move. Now, this looks a bit confusing, and it's not very mechanical. So how do we define it? Well, that is where we will use swing points or candle 2 or candle 3. The first candle will always be accumulation, and then we're going to watch candle 2. If candle 2 has a small wick, it can be the manipulation as well as the distribution. But as you can see here, we have a reversal candle, which is just manipulation, and then the third candle is the distribution. Now, if you've watched my candle 2 and candle 3 video, you know this, but the whole goal is to be trading that distribution or the expansion candle, that directional candle. To do this, we have to understand what it looks like on the lower time frame. We're going to let price open. We're going to let it form its opposing run or its wick. And as long as this is a shallow wick, it supports expansion. So since we have a shallow wick, it supports expansion, it forms a protected swing, and then I can trade it higher. So going back to the distribution candles or those expansion candles, what are those two scenarios going to look like? Candle 1 is always going to be that accumulation candle. So then I want to take a look. On candle 2, do we have a large opposing run where candle 2 opens, makes this large move against the direction we want to be trading, and then back up? When it has a large opposing run, that does not support expansion higher in candle 2, so I want to let candle 2 close and then trade candle 3 as we talk about in the candle 3 video. Now with a reversal to expansion candle, candle 2 doesn't have a large wick. Candle 2 makes a small, shallow opposing run below candle 1's low and then trades it higher, right? So in this scenario, you can see we have accumulation, manipulation, and then distribution. In this scenario, we have accumulation, and then the manipulation and the distribution happens in the same higher time frame candle. So let's take a better look at this. Here you can see this is an example of when we're trading that continuation expansion candle. We have candle 1, which is an accumulation. Candle 2 forms that reversal, but you can see it has a large opposing run. So we don't want to trade within this candle. We want to wait for candle 3. Here you can see candle 3 opens, makes a shallow opposing run, and then has that expansion higher. This is the candle we want to be trading. Now, how do we go about trading this? Well, we want to just wait for this wick to form. So you can see here, price opens, makes its shallow opposing run, has a change in the state of delivery, which makes this a protected low. If this is a protected low, this means this wick has formed, and then we can trade this expansion higher. Now, what does it look like with a reversal expansion candle? Well, this is where candle 2 has a small wick, right? So you can see a shallow opposing run. It has a change in the state of delivery. So that means that it formed its protected swing. We can anticipate this wick to hold, and then we can trade the expansion within the same higher time frame candle. Now, since we are focused on the 4-hour candle within this video, if I'm trading futures, these are the timings that I'm going to look for. And if you trade Forex, these are the timings you will want to be focused on. So just in summary, we want to align this with a daily bias, but we are going to use the 4-hour candles to determine a bias using candle closures, and if price should expand as it's already reversed, or if we are looking for it to reverse and expand. Those are the two scenarios. And the main goal, and what I want you to say in your head, is I need to let the wick form and then look to trade the body. If you always try to catch the wick, you're going to get continuously stopped out. Just let the wick form and then trade the continuation that follows. So let's get into TradingView and go over a few examples. So here we are with our first example, and we'll go top down on this one, and then we'll just stay focused on the 4-hour and the lower time frame structure inside of that. But I want to give one good example all the way from top down to the lower time frame for entries, just to show you what it looks like. So you can see here, I'm always going to start on the daily. You can see Wednesday, we formed a reversal, right? And Thursday had a continuation. So we can anticipate Friday to continue as well, as it closed outside Wednesday's range. That means we can look for price to trade to Thursday's high. Now, if you take a look, we are respecting the EQ of the previous day's range and that T-spot. So let's go down to the 15-minute time frame. So here we are on the 15-minute time frame. I'm using the 15-minute time frame in this example as it is paired with the 4-hour time frame. So what do we notice here? You can see that 2 o'clock had a reversal, right? We have a reversal candle. So we have accumulation here. So this is our accumulation. This is our manipulation, and we can go ahead and mark this out. Here's our accumulation. Here's our manipulation. and then we're expecting a distribution higher. Now, taking a look at this 4-hour candle here, you can see we had a large opposing run below the 2200 candles low. So you can see we opened, we did have a shallow run, but we never had a change in the state of delivery to confirm that low. So price continued lower. And at that point, we're making a larger opposing run, as you can see on the wick of this candle. Now price returns back into the range and closes pretty strong, forming this reversal candle. So that sets up, when could we expect this distribution to occur? Well, in candle 3, so at the new higher time frame candle. Now if we're taking a look at this and we're expecting price to expand in this candle, as price has reversed in the previous, we're expecting 6 a.m. to 10 a.m. to make a move higher. So with this, we'd want to look for what? We want to look for the wick of 6 a.m. to form. Now, how is that going to form? It's going to form a protected swing. Where could we form a protected swing in here? Well, we have a sweep of a low. Let's see if we get a protected swing that forms. And there you can see we have closed over and we are inside a fair value gap here. So I could then anticipate what? Well, if we have a protected swing in this new higher time frame candle, I'm expecting this wick low to have formed, and I can look to trade it higher. This means I can really take any entry in here with my stop loss on this low, looking to target that previous day high. So let's see how this works out. And there we go, trade to previous day high. So just to review, we had a bullish daily bias to previous day high. And then this is an example of trading that candle 3, that continuation expansion candle, as we have a reversal here in London. So we're expecting a New York continuation. Large opposing run creates a reversal candle, then looking to trade the expansion candle once its wick has formed. So here we are in another example, and in this case we're doing a Forex example on USD JPY. Now if you notice here, we have a reversal candle on the weekly time frame, so we could be looking for price to expand higher on the weekly time frame. So within this week, we'd want to see what? A shallow opposing run to form its wick in candle 3 and trade higher. So that's giving us our bias. Now if we look here, we have expansion, retracement, and this is a retracement because it is a slow, shallow move into what? A fair value gap, and it's leaving failure swings on the high. So you can see how it's leaving all these highs here. So with this candle closure here, this is where we could drop down to the 15-minute time frame and look for an entry. So here we are on the 15-minute time frame, and you can see how those timings are a bit different from futures. We have 1700, 2100, and then now we have this 1 a.m. candle. So there's a few things we can look for here. If we're looking to try to trade long, we would want to see a reversal off of our previous candle's low, this 2100. So the two scenarios, we have a shallow opposing run in which we can trade that higher within this same candle, or we have a larger opposing run, in which case we're going to wait for the open of the next candle to try to trade it higher. So let's see what happens. So normally if we're going to have a shallow opposing run, we want to see that early into the higher time frame candle. When price goes up first, that usually means it's going to come down. So this is not one where I'm looking to try to trade this reversal now, as it's already made too large of a range. Now we have expansion. Is this met with expansion higher? Because we need that expansion met with expansion to confirm a reversal, and we want to look for a change in the state of delivery. And there we get the change in the state of delivery, and you can see the model will then print. But if you take a look here, if we're trying to trade the open, low, high close, what is happening? We've already formed this lower wick. Would we want to see price go all the way back down here to form a new wick? No, because then that would be expansion met with expansion, which is bearish. So at this case, I have two options. One, I can either let this trade go because I don't feel like chasing it, or I can look for a continuation entry as long as my target remains open. So let's see if we can get a continuation entry. And for that, I would need a new protected swing. And what do we have here? We have price hitting a short-term target. We get expansion, retracement, and then because we reach into this fair value gap, that's an important level. We close over the down close candle into that. That is then a protected swing, and I can use that as a stop loss as long as I can get 2R to these highs. Right, so I could look for 2.45R to those highs. Let's see how that works out. And there we go. Now, why would I not want to really extend myself on this trade? Well, we're trying to trade an expansion candle, right? One, expansion candles only have so much range and so much time. we're going to get a new candle at 9 a.m. I'm not trying to hold really beyond that as I hit a target and we've already used our range. If I want to continue to trade this higher, then I'm going to want to wait for the open of the new higher time frame candle. So let's see what that looks like. Here you can see, if we are going to form another continuation after hitting this high, I'm going to want to wait for that new higher time frame candle because that gives us a new candle in new range. Then I'm doing the same thing. I want to let this low form and I can trade the expansion higher. Let's see if we get a continuation. We do, right? So once we get the closure through the series of down close candles that swept out an important level, which is right there, this is now a protected low. So I'm expecting this wick to hold as we trade higher. Now, I'm not a fan of trading over old highs, but I'm just trying to show you the concept of what I am trying to do here. So let's get into another example. So now that we have gone over a few examples using the 4-hour and 15-minute time frame pairing, which I find is the most straightforward, let's go over a few different examples using lower time frame pairings. So what does it look like if you're trading a 4-hour power of 3 and using a lower time frame fractal model? This is what people refer to as GXT, which is using Garrett's 4-hour profiling with my fractal model. So you can see here, we have a 2 a.m. reversal on London here on gold. And so we can anticipate 6 a.m. to have a continuation. Now, what would we want to see for a continuation? We'd want to see price open, make a high while respecting the EQ of the previous candle, and then trade it lower. Our whole goal is to let this wick form and then trade the body. So how do we do that on the lower time frame? Well, I can go down to the 3-minute or the 5-minute time frame, and then I want to wait for a lower time frame fractal model to align with that. So here you can see we have a consolidation. What do we want to see within a consolidation? If we're going to trade this lower, we want to see the consolidation highs ran out and then a fractal model to form. And that's still respecting the EQ. So let's see what happens. You can see we're continuing that consolidation. And there we run out the high or engage that high. So now what do we need? We need a change in the state of delivery to confirm that reversal point, and then we can look to trade it lower. Now, what are we doing here? We're using a lower time frame fractal model to help confirm the wick of that 4-hour time frame. So let's see what happens. And there we get the closure through. Now, this is one where if I am very confident in this trade, I could look to take an entry here, put my stop on a protected swing, or at least above 50% of this change in the state of delivery, as well as the EQ, and then look for 2R. Or I can search for a continuation. Let's see. So here we are right before the open of the new higher time frame. You can see we're getting a candle 3 closure on the 30-minute, also forming a protected swing. So I'm pretty confident in price trading lower here. Where do I want to see it not trade above? While marking out 50% of this, as well as the opposing candle here on the 30, I wouldn't want to see price trade above this area, right? It can trade into that, but not above it. And here we have a swing right above that area. So this is where if I wanted to capture this move, I could look to take a positional entry, putting my entry on the open of the new higher time frame candle, putting my stop on the protected swing, and then looking for 2R. Now that would be a positional entry if I'm confident in the move, or I could look for a continuation. Let's see what happens. So here we get a move lower to that -1. Now let's see. We fall just shy of our 2R, and we reach into a fair value gap here. So now if we're going to form another continuation, what do I want to see? A new protected swing. Here you can see we go back to our entry. And what do I want to see? If we're going to form a swing here, we need to go and close below this level, but we didn't. It doesn't mean we can't form a swing right here, but we're going to need another confirmation in here. And there we go. That would be our second confirmation. And if I didn't already take profit, this is where I could look to take an entry still. And why could I? Well, I still have an hour left expecting this candle to expand lower, but this is the entry that I would prefer. That would be a positional entry. But what happens? We get that continuation lower. And if you notice, this 6 a.m. expansion candle has a small wick and a large body. And if we go ahead and review this, all we are trying to do is trade a lower time frame fractal model that confirms the formation of that wick, and then we are going to trade the expansion lower. So here we are with our next example. We're on NQ on the 5-minute time frame. And you can see price has swept out its previous day high, and we have expansion met with expansion, which is forming a reversal. And you can see that with this higher time frame wick here on the 6 a.m. 4-hour candle. So if 6 a.m. forms a reversal, we can look for 10 a.m. to continue lower. That would be that candle 3 continuation, or the continuation expansion candle, right? So where do we want to see that form? Well, we can use the lower time frame fractal model here, where we have an hourly and 5-minute model, and it's printing out the T-spot. We know we want to see price open, make its wick in here, and then trade lower. And that applies to both time frames here. So if we don't want to see price trade above this area, we don't want to see it reach into this fair value gap. So we could use this as our stop loss to trade it lower. So we could look to enter anywhere in here, put my stop on that opposing candle, or even on the fair value gap, and then look for 2R. Or I could look to the -1 standard deviation. Now, why would I look to the -1 standard deviation? When we have a large opposing run, it doesn't make sense in terms of the range to look for these deviations out here. So I'll use -1 as my target. So let's see how that entry works. And there we go, and we hit our target. And you can see price opens, makes its high, a very shallow high, and then can trade it lower. And this is one of those positional entries again, where I don't know where exactly price is going to form its wick because it's kind of lacking that point of interest in here. I just want to be on side with the move. And I'm going to position my stop loss in an area that if it reaches it, I am invalidated. So here we are in our last example. We have the 5-minute time frame, as you can see here, with the hourly model. So the 5-minute, the hourly, and then the 4-hour time frame here. And we're just going to walk through some price action, adding it all together. So if you notice here, we were in a bearish structure here with the candle 3 closure, and price opens 9:30, makes a move higher. So then we get a move lower to these lows. Off these lows, we have a nice V-shape reversal. So seeing that, it makes me think if price is going to reverse here, it can trade where? All these failure swings on the high. So I'd want to see price trade up to these highs here. Now taking a look, we do have a fairly shallow wick off this previous low on the 4-hour, so it can support expansion higher. It is more than likely going to wait for 10 a.m. as what? We are 5 minutes away. As we let this play, you can see we have SMT, we have that CISD. This is where I could look to take an entry on the reversal. I'd want to have my stop at least on the body low, and then look for those highs. So that would be the first possible entry here. But I could also look for a continuation higher. And here you can see we are wanting to trade the open low high close of this 10 a.m. candle. Price opens, makes a shallow wick, and you can see we have a shallow wick on both the 4-hour and the hourly, supporting expansion, and we reach into a point of interest. So this is where I could look to take an entry as a continuation as well, right? Because fractally, I don't expect price to trade to this low. So that could be another entry. And at this point, everything is supporting expansion, so I just want to look for continuation entries to this high. Here you can see we get a consolidation, we get a sweep, and then we have a new protected swing. Once again, this would be another entry to that high. As long as I can get to R, I do. And let's see what happens. Takes a minute. Let's see if we get there. And there we go and hit our target. So you can see there's various different ways to enter in here. You can enter on that reversal candle, or you can wait for that expansion candle. But you can see 6 a.m. reversal, 10 a.m. continuation, aligning that with a fractal model on the lower time frame. You could also just use the 15-minute time frame and look for entries in there, which is also valid. And now we hit our target. Now let's talk about this. If we're looking to try to trade this back into the range, does it make sense to fight this expansion candle? No. It makes more sense to wait for this expansion candle to close, which would be at 1400, and then look for a reversal candle to form and trade that back into the range. So really, this is a zone where I would just not want to touch price as it hits our target, but I don't have any reason to trade that back lower. So now we have a consolidation, and this fits the phases of price as well as our idea. If we have a consolidation and we're looking for a reversal off this previous candle's high, those both line up. For a consolidation, we'd want to see a manipulation of the high to trade it lower, and that would also line up with the new 4-hour candle. So let's see what happens. Here we take out the high. Do we get a change in the state of delivery? And there we go. We do get a change in the state of delivery. And that's also right at the open of a new higher time frame candle. So now we're trading a reversal candle on the 4-hour with a continuation here. So if I wanted to trade that, that's something where I'm going to have to enter at the open, because with a very aggressive move, it's unlikely to give much of a retracement. and then look for 2R. Let's see if this gives us anything, or if there is any continuation that follows. Oh, looks like it might give us a continuation. Let's see if we can get a closure below there. We do, so you could look for a continuation there. And does candle 4 continue? Right, it does. So you can see this is an example right here at 10 a.m. of a continuation 4-hour candle, right, where we have a reversal at 6 a.m., 10 a.m. continuation. This 1400 candle is an example of that manipulation and expansion occurring in the same higher time frame candle. So you can see both of these support expansion. This one supports expansion higher, this one supports expansion lower, and that's where you want to align your lower time frame entries. So I hope you enjoyed this video. If you do have any questions, be sure to leave them in the comment section below, and I'll get to them when I can. But I hope you have a great rest of your day, and I'll see you guys next time. Have a good one.